Welcome back. Now, according to the Financial Mail, Naspers, the corporate giant, has long been regarded as an elegant swan in the business world. After a decade of questionable investments, strategic twists, or massive write-offs, signs of a turnaround are emerging. Joining us to unpack whether Naspers or not, or Naspers is finally done burning through cash, is Financial Mail's Anne Crotty. Anne, thank you so much for your time and a good afternoon to you.
Pleasure.
So, Anne, Naspers is a big deal on the JSE. I think the biggest company we have by market cap. And that's what makes it really important and why we keep watching it. But let's just talk about some of the observations that you've made with the company over maybe the last few years.
Okay. It's sort of, it was cursed by success in a way when it bought into Tencent in 2001, and nobody paid too much attention to it until the sort of late 2010s, and then into about 2012, 2013, 14, Tencent took off, dramatically, beyond anybody's expectations, apart from perhaps Tony Ma, who ran it. And it sort of dragged Naspers behind it. And unfortunately, I think Naspers didn't want to just be the holding company of an extremely valuable Chinese investment. And so they thought that they would use proceeds from the dividends and their other businesses. I mean, they had DSTV, which they listed, unbundled to shareholders in 2019. So Naspers has got this culture of, it goes back to Huisgenoot back in the 80s. 70s and 80s, and that made a fortune of money, enough money to help them get into Mnet and DSTV, and then they had Tencent, it was like the really big win. But it just became too big for them. It became not too big for them, but it became problematic. They dominated the JSE, Naspers did. And the discount between the Naspers share price and its underlying assets just got bigger and bigger. It's about 60% discount. Shareholders were getting really upset. A lot of people were calling for an unbundling. There was a lot of pressure on the company to do stuff. And what they did just seemed to annoy the market, because what they were doing was just buying IT stuff, all sorts of kind of bits and pieces. They were extremely expensive bits and pieces, but none of them actually seemed to go anywhere. And then they started doing transactions. They listed Proces with all the international assets on the Amsterdam Stock Exchange. And then they did this cross-holding deal, which really upset shareholders in South Africa. There's a few, there's a few other transactions. And then earlier this year, they decided to unwind the cross-holding. And everyone was delighted. Meanwhile, their own portfolio of assets, this slightly ragbag bunch of assets, began to look as though they were making progress towards making profit. They're still only making little, not much money. They're still way behind on generating, I think, a viable portfolio of assets. But there were signs of making progress. But much more important was that the slimlined Naspers structure now made sense, and it was more transparent. Shareholders could actually see. The previous one looked like, spaghetti junction. Now it's nice and streamlined. Naspers is here. It's got a 43% stake in Proces, but because of the high voting A shares, it controls Proces. So it's a really elegant structure that they have, and it's tax efficient as well, which is always important.
What is so interesting, with all of what we've seen, these acquisitions, the write-offs that we've seen within there, and investors being uncomfortable even with the cross-holding structure, and it's never ever put the investment case for the company in jeopardy. I'm wondering why that was the case. Were investors happy that even though they were not quite sure what was happening with the non-Tencent assets, the company still had strong returns and was making them some money?
Yes. No, shareholders were very irritated with what Naspers was doing over the last 5 years. And I mean, I'm not sure if what they created was the original plan, but what they've created is a very elegant and tax efficient, and it's a very efficient structure. So I think shareholders will become even happier. I mean, it's very difficult to be unhappy with Naspers when it's given you so much money, you know. I mean, it's created so much wealth for shareholders, for the country, and it's been an amazing success. And I mean, whatever else they do, they've invested, I think, $20 billion over the last sort of 10 years or so, but and they haven't got much to show for it, but they still got 25% of Tencent. I mean, that's a phenomenal company. I was reading the other day, the problem with Tencent, though, of course, is both the problem and the advantage of Tencent is that it's located in China. And there's always a little bit of a worry under Xi Jinping that, you know, you could wake up and suddenly actually not have a claim to this very important asset. But I was reading the other day about how important Tencent is in China, and it's amazing. A lot of people have been declared bankrupt, you know, just ordinary citizens who couldn't afford to pay their mortgage or whatever. So the government has been able to block them from getting any debt by using WeChat, which is owned by Tencent, because WeChat has a payment system in it. So there's a remarkable kind of symbiotic relationship between government and Tencent.
Well, it is a very fascinating story, and I do implore people to read that article because it really does speak about a transformation there within Naspers. And thank you for all your time. It's always a pleasure speaking to you. That was Financial Mails and Crotty.